Welcome back, this is Mike with RPQ Quants. Today I'm going to show you 3 of my most favorite proprietary indicators I use every day in the context of my swing and trend trading. None of them are new and they all have repeatedly demonstrated their value over the course of many years and throughout a variety of diverse market cycles. First, we have the Netlines indicator, which is based on a very simple candle pattern and is used to establish crucial buy and sell levels that quite often lead to price acceleration higher or lower. The second is based on another very valuable but often neglected phenomenon called microgaps, which have a tendency to occur in the direction of the ongoing trend. Last but not least, we'll cover the Kalman filter, one of the most important and common estimation algorithms in existence. So, let's get started. Okay, the Netlines indicator is a very simple concept. All you need are 3 candles. And here's a good example right here in the center of this chart. So we have one candle right here, which has a high. We have a second candle, which has a higher high. And finally, we have a third candle that has an even higher high. So we've got 1, 2, 3 highs. And each high, of course, is higher than the next. So technically speaking, it's 2 higher highs, but we always need 3 candles, obviously. So when you have these 3 highs in succession, where do you paint the net line? And what kind of net line is it? Well, simple. You have 3 higher highs, you actually paint a net line sell level down here. Why? Because by painting these 3 highs, it shows that there's a lot of progress that has to be reversed. And if you reverse this trend higher, there's like a little tiny mini trend higher. If you reverse it and you cut through that, that has statistical significance. Similarly, here on the right side, we have the inverse happening. It's a very convenient example. So here we have one candle, of course, same candle that we ended with the net line sell level. Here we have a candle that has a low, and the second low is even lower, and then we have a third low that's even lower. So again, we have a lower low, and a third low that's even lower. And where do we paint the net lines? Well, you've guessed it. We paint a net line right here. It's a buy level, a net line buy level. Why is that inversely related? Why do 1, 2, 3 lower lows produce a buy level? Well, because again, it's a tiny little mini trend. And if there's 3 candles moving in the same direction in succession, then overcoming that and returning that and reaching above that high here has statistical significance. And, as you can tell, just by looking at this chart, it actually works very well. This is a 120-minute chart right here. And I'm going to zoom out a little bit and we're going to look around a little bit and see what we get. There you go. All right, so the first thing you'll notice when you use this indicator is that it's very interesting, especially during trend phases, because here we clearly have a downtrend. This is Bitcoin USD in May of 2022, and it's been trending down quite strongly. And we see here some very interesting phenomenon. For instance, here we see some net line buy levels near the highs. Well, clearly they were produced because the market was trending higher and it was creating a series of higher highs, and that created this whole cluster of net lines. And then all of a sudden, the tape went sideways. See right here. And it never managed to actually breach this cluster of net lines. And that's usually a bad sign. And then it kind of falls off the plate. But lo and behold, see here, there's actually a net line that was tagged. That was actually produced a few candles ago. And in this case, I have the net line set to 7 to expire. So each net line basically has a lifetime, right? And when you look here, I think it's actually in the settings somewhere. No, not in this one, but I remember distinctly this is actually set to 7 candles here. And if it gets breached before it expires, then we have a sell signal. And it triggers the sell signal right here and then continues lower. And then see here, because of the lows that have been produced, we're starting to see some net line buy levels. If we would reverse this, then we would have a buy signal. But we don't. And you see here, right here, it continues lower, and then here, it barely scratches a few net line buy levels, but it doesn't breach them. And then it breaches through even another net line sell level right here. And it continues lower, and here it produces again through this little upswing here, actually this downswing, it produces this net line buy level. Comes back up, tries, but never really reaches it, and then continues lower. And so, as you can tell, during this downtrend, which is a quite consistent, nice downtrend, you start seeing this accumulation of these net lines here above, on the other side, opposite side of the trend, on the upside. And then when the market finally produces a little bit of a, right up here, produces a little bit of a snapback, it actually tries to overcome a net line buy level, but fails. That's usually a very bad sign. See right here, tries to overcome. This was produced obviously by 1, 2, 3, these 3 candles right here. See how that works? It's very cool. And again, I just randomly pulled back here. I didn't even know in advance of which chart I'm going to look at, and that was just a chart that was there. So it's not that I was cherry picking anything, but you can see how it works, and it works so effectively. And here we see actually a net line sell level being breached again, but then it reverses it. So in that case, what would you do? Well, we reversed the net line sell level. Well, we were still short, so at this point we still remain short, and we're waiting for a net line buy level to be breached. But here it can't overcome, and what does it do instead? It breaches through another net line sell level, once, snaps back, and then does it again.
Connection lost.
And that was my trading platform losing the connection. Doesn't really matter, we're not doing anything live. So here it slices through again, and another sell signal has been triggered, and that continues until finally we see selling exhaustion right down here. So this big spike low here that snapped back, and then it tries to overcome these net line buy levels, and it fails first, falls back, but holds above new net line sell levels, and that's good. That shows something else is going on. And then finally we get a breach on the buy level, see right here, and we're in business. And that's how this concept works. It's actually a very simple and elegant concept that provides a lot of context. It's not the be-all and end-all of all indicators, of course, but I like to use it in combination with other indicators, and we're going to talk about it a little bit later. One thing to point out, what I also find very interesting is that doing these sideways formations, like for instance, we have one right here, right now. For the last few days, we've basically been pushing sideways here in Bitcoin. And you can see how it's trying to slice through sell level, then back above net line buy level. And here's another buy level, and then back down here. And it kind of keeps us net zero, right? You would go short here, you would go long here, right? Stay long here, and then you go short here again. So here you might have lost a little bit, here you gained a little bit. And then here you buy again, right? Here's the net line buy level being breached. And you buy, and then here, you sell again. So it keeps you actually in the game quite nicely without you being chopped to pieces. And that's just the indicator by itself. There's actually other things we can do to sharpen our view on this and make an even better assessment. And we're going to get to that in a second. So let's bring in another indicator that I use all the time. It's the second one. It's called the microgap indicator. And it works very well actually in conjunction with the net line indicator. So let's turn this one on to visible, because I already have it waiting for you guys right there. So what you just saw pop up on the screen are these little arrows, right? And it's a very simple concept. And it's sometimes hard to see with the naked eye, actually. The way it works is that if you have a small gap between the open and the close, right? You have a close of a candle. Let's look at one right here. Where's a good one? Right here, that's a good one. Let's zoom in a little bit. Scroll over. Up. I'm grabbing the wrong thing. There. All right. So it's really barely visible with the naked eye because our eyes are so easily deceived. Here's actually a tiny gap between the close. Clearly, this candle closed lower after breaching through this net line sell level, and in crimson right here, right? And the open right here, which also, by the way, ends in a negative, this candle, but the open is a tiny bit, a few ticks lower than this close. And what that does, it produces a micro gap. It's a tiny gap, a little crack in the tape. And so it's, in a way, it's a meta indicator. Just kind of like the net lines, by the way, too. It's a meta indicator. Why? Because it really is not price dependent, like for instance a moving average, because a moving average wouldn't really care if there's a tiny gap or not, because it just looks at the closes in this case, and it would still produce the same signal. But the micro gap tells us basically a little bit more about how the tape unfolded. Because if you think about it, a candle, what is a candle? It's really like a graphic representation of price action, because the only purest price action is a tick chart. And a tick chart really shows us exactly what price has moved at every price change, at every tick. And when you look at a candle, it's more of an abstraction based on time, right? You have an hour, or you have a minute, or you have a day. Or you have in this case, you have a 120-minute, 2-hour chart. And why do we do this? Because otherwise it's information overload. And it tells us, okay, this candle, for instance, right here, it opened right here, went all the way down here. We actually don't know what happened first. Just by looking at this candle, we don't know if this candle went up here first, and then fell back down, and then snapped back, which is probably a good possibility. Or if this candle opened here, went down first, went up, and then went down to where it would close. Different scenarios. We won't know. You can only know looking at finer intervals, right? So in that respect, it's an abstraction of price, but it's not an indicator. And I think the microgap is in a similar vein. It's a concept that tells us a little bit more about how has price unfolded. So it gives us valuable hints. What type of hints? Well, I think it's quite obvious just looking at this chart. I mean, why are these all pointing down? And here it's pointing up for a little bit, doing the sideways. And then it points back down here. See that? That's usually a bad sign. And then it keeps pointing down, keeps pointing down, keeps pointing down. And here again, it points up briefly, right? While there's a little bit of sideways, and we keep going down. See that? So it's not unusual for these microgaps to occur in the direction of the trend. And again, it's not the be-all and end-all of indicators. By itself, it can help, but use it in combination with other things. For instance, here, it was still pointing down. It's unclear. We're going up, we're going down. It's still trying to figure out what tape wants to do. And here we're getting a microgap higher after 2 positive candles, which is a positive, which is a good thing. And then here things get really, really messy. And right now they're kind of messy. And so you probably just dismiss that. But especially during trend periods, it's very important, right? It's very important to kind of gain a good understanding of what the trend is. And so that leads us to the third indicator, which is the Kalman filter. So what exactly is the Kalman filter? And why should you care? Well, odds have it you're using the Kalman filter all the time without actually ever realizing it. It's traditionally used in signal processing, navigational systems, medical applications, industrial systems, robotics, etc., etc. It's probably even hiding in various applications on your mobile devices, for example, your phone's GPS or your car's directional mapping application. The Kalman works by combining measurements from various sensors in the presence of a lot of noise. For example, a temperature sensor in a steel plant, or an altitude sensor in an airplane traveling at high speed. The way it does this is via estimates based on often inaccurate and uncertain measurements. Better yet, it does it extremely quickly, within just a few iterations. So for the Kalman filter, I'm actually going to turn the 2 others off for now. I'm going to turn them back on later, and I'm going to look at everything in combination. But I think it's probably valuable to look at the Kalman just by itself. I've actually 2 of them. I have a long-term and a short-term. So here we have the 50 interval. So in this case, it's 50 120 candles, which is 100 hours. Right? And then we have the 20 right here. So let's turn both of them on. And you can see this one here is the 50 and this one is the 20. And you might look at this and say, well, Mike, this looks a lot like a moving average. Maybe it's an exponential moving average or a simple moving average. Well, it's not. It's much better, much more precise and much more responsive than a moving average. At the same time, it's also a lot more consistent with the trend and does not get easily detracted from its ongoing trend by a quick move to the upside. And we'll look at a few examples and then I'll show you actually how the Kalman compares with a moving average. So as you can tell, the short version of the Kalman here in blue, I hope it's blue because I have a little bit of a color weakness, but just bear with me if it's not. So this one right here is currently falling below right here, see? And it happens about here, when it becomes really clear. No big surprise after this long candle overcomes quite a bit of support and probably tells us that things are getting pretty ugly. And they do. And the Kalman keeps us really in the game here for quite a while. So here it becomes a little bit embedded, and there's a short amount of time when we're thinking, okay, it might cross back over, but it actually sticks with us quite nicely and really leads it down very nicely. And again, the short always remains below the long-term version of the Kalman here. Here it gets a little bit entangled again, doing a sideways tape, but here it leads back down again. Right here. Here's the crossover, right, near the lows. And it happens actually quite quick. And the same here, see? First candle really gets us into the other trend. 2 candles or 3 candles in, we know we're probably leading lower. It's, again, pointing lower, and it's crossing over again, the 2 lines. So when things get a little bit more busy, like we've got here, we'll basically go short here, go long here, go short here, go long here, and so on. Again, this is really a choppy tape. Very difficult tape. Not easy tape. And that's why I like to show this tape, because it's not the simplest tape to trade through. But the Kalman keeps us really in the game all the time. And this is, again, a 120-minute chart, which is quite busy. So you see these swings here, right? I think it does an excellent job. So the question, of course, you might ask yourself right now is, well, wouldn't a exponential moving average do the same, or perhaps even better? Well, it's a good question. So let's compare it. I actually have an EMA right here. It's set to yellow. Right? Let's turn it on. And by the way, this one is a 14. Remember the Kalmans are a 20 and a 50. But let's set this one to 14. 14 should work very well. All right. That's again an exponential moving average, not a simple moving average. Okay, so here is the EMA in comparison. And just to be clear, this is the EMA right here. And you can see right away how much looser it is and how much more time it takes for it to respond. See? Right here. And here it leads lower, and you can see how price falls away from the moving average, which can have positives, but it also can lead to much delays, right, following price. And again, this is a 14. If I would set it to a 20, it would even be less responsive. And so here it does a fairly good job on the way down. But wait, right here, how long it takes for price really to overcome it. It's at least 2 candles later. And the same happens here on this side. Once it overcomes it, see, again, I'm going to select it right there. So you see the dots, right? That's the moving average. And the crossing on the Kalmans happen much, much, much sooner. And again, similarly, right here, see how it slices through the Kalmans right here? It takes all the way to here for it to slice to a 14 EMA. And, here it's probably a little bit more of a toss-up, but you can tell there's definitely a distinct difference. So it's fair to say that the EMA is a lot less responsive. And if I would set it to a 20, it would be much slower. So let's go to a daily chart right here. And I think here it becomes very painfully clear. This is a daily chart, again, Bitcoin USD. And one more time, if I double click, this is the one, just making sure it says right here. This is the EMA. And the EMA right here with dots, seaming it all the way down. And you can see it's very loose. And for instance, here on the way up, see how it slices through here? Now, that's quite a few handles. And it really, until it overcomes, it takes quite a bit more time. Same here, right? Here's the EMA again, it's much higher. Here's the EMA again, much, much higher. And here it is trailing again. See how it already signals a breach right here on the way down. That's officially a breach for both. And the EMA takes all the way through this candle, and you might, if you wait for a close, you might be all the way down here. So that this is a crucial difference right here, because you're getting a close below it right here, below both Kalman filters. And here you would actually have to wait for a close right below here if you work on closes. If you don't work on closes, admittedly, you would probably switch over into a short position. Right? So not that an EMA is completely useless. Of course, I'm not saying that. But you can tell that even a 14 EMA is much less responsive than even a pair of a 20 and a 50 Kalman filter. So let's turn it off again, because I don't want to overwhelm you visually. And there you have it. All right, it's off. And let's now look at the Kalman filters, or Kalman lines, if you will, in combination with the micro gaps and as well the netline indicator right here. So here we are. And I think immediately you can see the power of this, because I'm going to start right over here on the left with the uptrend. And you're seeing the tape basically turning on a dime here. I mean, literally turning on a dime. We're still dealing with downside here, and all of a sudden it just gets out of the gate and just punches higher. And that similar, the EMA would take forever to catch this one. And we probably might be up here until it really catches on. And here we got a micro gap higher, by the way. And on this one, actually, on this candle, we got a micro gap higher. So that's good. We also get a net line bi-level breach, and the two Kalmans are crossing. So a lot of evidence showing that we should probably get long. And so we're going long, 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 long. We stay long because really there's nothing that stops us from being long. There's no, even the pullbacks are clearly still above. We're actually outside the short term on closing outside, and no net line sell level is ever being touched. And that remains this way until here. Here things get a little bit screwy, and you might think about taking partial profits, or you might even close it out here. And here it starts dancing a bit on the net line sell levels, but it really doesn't breach it until here. There's a breach, and admittedly that's a false breach because it snaps right back and you probably get back in. And then you kind of get shopped around here for a little bit, but there's a net line buy level breach, no net line sell level breach, and then it keeps you in the game until all the way here when it breaches to a net line sell level again. And from then on, see how it starts seeming, I'm going to move my head a little bit, starts seeming the downtrend, right, on the upside. See all these net line buy levels that it never even touches. And here it touches one. But this is pretty busy tape. But the two Kalmans, they really keep you in the game. They don't get distracted by these quick moves. And that is extremely valuable because like an EMA would fairly easily probably get distracted and might swing in the wrong direction. And a very short-term EMA if you're trying to catch that. And that's the problem. That's inherently the problem with these moving averages because they're just basically based on what price has done, and they don't really try to project on a particular trajectory. This one does. The Kalmans do. And so they make an estimation, which is very different from an EMA. EMA doesn't make an estimation. An EMA just plots based on what price has done already. It's just purely historical. So there's a slight difference between them. I think the concept works extremely well if you're looking at these two indicators together and then throw in the third one in, which is of course the micro gap. And I know it's a little bit busy, this chart now, and but you can see the micro gap indicator pointing down when the trend is strongly down. And if I maybe turn the net lines off, 1 second, it's become a little bit more apparent. Let's click on net lines, turn this off there. Okay, and you can see that the blue candles, actually let's turn the Kalmans off as well, because they all have their own breach signals and it gets a little bit busy. There's one, there's the second, there you go. So these are only the micro gaps, but you can tell how they point down. Here they point down, here's a little bit of an interruption, still trying to figure it out. And we're pointing down again. There's some sideways. This is difficult tape, by the way. I just want to point that out. And we're continuing lower, 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 lower until then we're going up a little bit. So it usually points in the direction of the trend. Again, not the be-all and end-all of indicators, but it's very, very helpful. And in particular, the Kalman. I think the Kalman itself, if we just turn the microgaps off one more time, from last time, and turn the Kalmans back on, which I really find absolutely superior to anything, on the moving average side, no matter which type of moving average you pick. I mean, it's just fantastic how it keeps in the game. And this is a good example here. See, I mean, this is quite a deep retracement, but the Kalmans are not crossing. They're not crossing. They really keep you in the game, and they keep you in the game all the way up here until here. This, of course, is hard to avoid. I mean, there is no holy grail of indicators, and it takes two candles, I guess, to really decide that it's gonna turn to the downside here. And here it picks it back up and leads us all the way up. So again, the two Kalmans extremely valuable, especially doing trending tape, and they keep you on the right side of history when it comes to sideways tape as well. They don't cross over too quickly, but they're also not too slow in responding when things take a turn in count, right? And price is going in a new direction. They don't take forever to get you into the game. And that's why I find them highly superior to any moving average. Okay, that's the three indicators: the net line indicator, the microgap indicator, and the Kalman. Hope that was enjoyable and you learned a little bit. Don't forget to subscribe right down here and upvote the video if you liked it. I'll see you guys next time.
What are you doing in here? Subscribe to our channel. Upvote the video. Don't touch my chocolate pudding.